Welcome, everyone, and thank you for joining our webinar on how to elevate your business with next-level technology. My name is Ali Pakalnis, and I will help facilitate our webinar today. Before we get started, here are a few tips on using the Zoom platform so you can engage with our presenters and have the best experience possible. You should see a Zoom toolbar with icons for Ask a Question, Chat, and Raise Your Hand. You can use the Ask a Question or Chat to submit a question or comment. If you need any assistance, click on the Raise Your Hand button and I will connect with you to help. We encourage you to ask questions throughout the presentation and we will do our best to answer them all at the end. If we didn't answer your question, we will follow up with you personally following the presentation. If you experience audio issues, you can access your audio settings and test your audio when you are already in the meeting. At the bottom left-hand corner of the Zoom meeting toolbar, you'll find either the headphone or microphone logo to join audio or mute unmute. Click Join Audio to choose to connect your computer audio or dial into the meeting with the phone. Once your audio is connected, click Mute to disable the audio or Unmute to enable your audio. Within 72 hours of the webinar, you will receive a link to download the slide deck and recorded presentation. And with that, I'd like to introduce you to our moderator for today, Lindy Antonelli.
Thanks, Ali. Hello, everyone, and thank you for joining our panel discussion here today. I'm Lindy Antonelli, partner in our consulting practice at Armanino, and I'm happy to be moderating today. I focus particularly on taking high growth companies off of legacy platforms and onto our cloud-based platforms, which are Sage Intacct and Microsoft BC. So happy to be here today, and we've got our great panelists here today with us. I'll just go in the order of the panelists, and Brian, if you could start, just introduce yourself and tell us a little bit about your role. We'll go down the line to Brian and Ashley as well, and then we'll get into the presentation. Thanks.
Thanks, Lindy. My name is Brant Kucharski. I was the Chief Accounting Officer at Grubhub for 10 plus years. I joined the company when there was about 30 people, took them public. Was a public officer for 5 plus years, 7, 8 years, till the company sold last summer. Currently, I'm the Chief Accounting Officer of Ethos. Ethos is a life insurance / insurtech company. We raised $500 million from Sequoia, Excel, some of the top VCs around, and we are trying to disrupt the life insurance technology space. And I will pass it on to Brian.
Thanks, Lindy and Brant. My name is Brian Cornett, Senior Vice President of Accounting at MRO. Prior to this, I had my normal stint in public accounting and then went into private accounting with a consulting firm as a controller and then CFO. I was there for about 14 or 15 years before making a transition over to MRO, which is a private equity owned company. So that brought about its own new challenges, which I had never faced before. So working with Armanino and Dynamics has helped us to overcome some of that.
Great.
I'm Ashley Pena with the New York Philharmonic. I'm the Director of Finance. I've been with the organization a little over 3 years, and I was brought in as part of the team to facilitate a long-range strategic and financial turnaround plan. I've been in nonprofit for about 15 years and have spent the last 10 years in the performing arts space.
Great. Thanks, Ashley, Brian, and Brant. So happy you could join us today and looking forward to our discussion. So first of all, our agenda here, just a little bit about Armanino, and then we're going to talk about what drives the business case for moving to next level technology. We'll get right on to our lively discussion. Next slide. So who is Armanino? We're a world-class national consulting and accounting firm. With our entrepreneurial spirit and transformative approach, we solve our clients' business problems so they can focus on growth and success. And we know you'll love us. Our clients do. We have one of the highest net promoter scores out there. We are up with the likes of Netflix and Peloton, Zoom, Starbucks. You can see the scores there. This is a ranking by our clients and customers and how they score us against our peers. So we're so excited to have this honor, and you'll know more if you work with us. There we go. Yeah, next slide, please. So we have several service lines. We're not just your typical accounting firm. We do have audit and tax. I'm in our consulting practice, which is where our technology consulting is. We also have business management, which is for high net worth individuals and a lot of entertainers, where we are the CFOs of their lives. We also have a crypto practice, which is interesting in and of itself, wealth advisory, and then we do have risk assurance too. So we round out our service lines with a lot of offerings for our clients so that we can be the strategic business partner to the finance and accounting team. We also specialize in several key industries, all of which are represented here today on our panelists. You can see the industries listed. We are the leading top accounting firm specializing in cannabis nationally. So that's opening the door to a lot of other areas besides just helping with their banking. We do a lot in that area, but you can see our industries there. And then more specifically, because we're talking about technology today, here's just a high-level overview of our technology implementation and support. We have two prime platforms for ERP. One is Sage, particularly Sage Intacct, and then the other is Microsoft. We've been their inner circle for the better part of the last 15 years, which is the top, like 0.5% of all the Microsoft partners in the world. In the Sage Intacct world, we've been their VAR partner of the year for 8 out of the 11 years of the channel's existence. We are in our technology consulting practice. We also support Adaptive, Carta for ShareWorks, Salesforce, and Blackline. We pride ourselves in that we're not auditors or tax people in busy season and sort of just implementing on the side. Our full-time careers are in technology consulting. And to date, we've had over 2,800 implementation and customization projects over the span of 15 years, where we not only specialize in implementation, but in project and change management. That's one of the biggest things when you take on a new technology solution platform, is the change management. So we have folks that are dedicated and certified in PM, project management, and in CM, change management. So with that, we'll go to the next slide. And we see a few drivers. We're going to hear more about this today on our panel, but really, once you start growing, you're going to have growing pains and you're going to have needs, and it will really, that will be a key driver to helping you choose a robust platform that supports those goals in many different areas and aspects of the business. We're going to hear that today. But I think it's important before you make the technology switch that you do hear from your peers about how they selected cloud-based platforms and how this has helped really change and evolve their businesses with the new platform. So with that, we will move over to the Q&A, and I'd like to start with Brant. So yeah, okay, great, the deck's gone. So Brant, you're at Ethos today, a company that is really heading for great scale and success. But really, let's go back in time to the early days of Grubhub, when you started there, and what your finance team and technology stack really looked like then.
So when I joined Grubhub, there was about 30 people. We were on QuickBooks. We probably had a couple thousand restaurants, and we were faced with a situation where QuickBooks was dying on us for 2,000 to 3,000 restaurants that we had on the platform. And I remember when we left, we had 300,000 restaurants, and we probably only had a year until QuickBooks would die out on us, right? And part of, when people hear like you're outgrowing the system, part of the reason was, we were growing, 400 or 500% year over year, even month over month, sometimes it was 40%, back then. And, the way a business like that works is we collect the money, we take a cut, and we pay back with a check, and each check is a transaction. So we had, 2,000 transactions a week. And then, 3 months later, it was 10,000 transactions a week, and it just grew, and QuickBooks couldn't handle that volume.
Yeah, when you start getting up there in volume, definitely a QuickBooks type of solution is going to break down.
It was that though, but also, the back end of Grubhub, the tech stack, didn't connect to QuickBooks. So to get all that over was manual, right? So you're kind of trying to take all the stuff that happens on the order engine with Grubhub and all that, and then trying to get that over to your accounting. And it was a nightmare at 2,000 restaurants, and it was quickly becoming a nightmare. And, the key with any kind of these e-commerce companies is connecting your back-end tech stack to your ERP, like Intact, and having to speak to each other and pull that data in daily, right?
Right. Also, as you were marching toward IPO, was that a case as well? Was that a concern of your auditors that you were on QuickBooks?
We got off it pretty quick. We went public April 2014. We were probably off QuickBooks within a year of when I joined, which is like, maybe 2011 or so. So we had a good 2 or 3 years before, but you're right. The auditors, brought up massive risk of, well, you're taking this independent system from the engineering stack and trying to get it to speak or bring over manually to your accounting ledger, and just full of risk, right? And, it's very hard to get comfort that you have everything right. Things aren't changed, things aren't corrupted. And, there's no way we could have gone public without having, a system that could pull our back end information into our system. And, just very, very hard to, you really can't even do it in spreadsheets. Like, maybe if you only had a couple hundred software contracts, you can kind of get by, but, we were way past that point, right?
Right. Well, hey, Brian, why don't we step over to you? I know MRO is on high growth trajectory today as well. And you are backed by a leading growth oriented PE firm, private equity firm. And I think you've acquired like a dozen or so companies in the last 10 years. You've also been ranked on the Inc. 5000 list of fastest growing private companies for 8 consecutive years. How has Brad was just talking about growth, but how has your growth impacted your firm and your technology stack, I guess, over the last 10 years?
Our growth has been, historically about 25% per year over year for the past 10 years. Not quite what Grubhub was experiencing, but still pretty good in my eyes. And just like him, we were on QuickBooks until a year or so ago.
Wow.
Well, actually, we went live with Dynamics this year. So it was until this year we were actually still live in QuickBooks. Now, going back to the acquisitions you're talking about, the first 10 or so that we did were asset purchases. So we just absorbed their contracts and their accounting into our systems. Not too big of a deal at that point. The last 3 that we did were equity deals. So we now have, fully fledged subsidiaries out there. So we have the need for consolidation, currency conversion. One of the subsidiaries has its own subsidiary in India. So that brings about the currency conversion. So obviously we needed a more robust accounting system that could handle that and help us become more efficient at the same time. So we started looking around and, landed on Armanino and BC, Dynamics Business Central.
Great. Another good story. Ashley, let's turn to you. Can you share with us about how the New York Phil navigated disruption, specifically during the pandemic? I know that was shortly after you started there.
Yeah, so I had been with the organization about 6 months when the pandemic hit. So, operationally, our business is bringing groups of people together. So overnight, we went to being, a renowned performing arts organization, and now we're a public health hazard. So we pretty quickly had to, figure out how we were going to continue to engage audiences and engage new audiences, because our digital solution is one of the things that we turn to. We launched an online streaming platform using existing media that we already had, which was, fantastic for reaching new audiences. On the finance and accounting side, we had just finished wrapping up our strategic and turnaround plan in March of 2020, and we were about to present to the executive committee in April of 2020.
Wow.
And as soon as the shutdown happened, we were like, well, scrap that plan. So, the other thing that was interesting about the fill is that it was entirely paper-based when I got there. So people would walk, a stack of paper in for, journal entries for me to approve. So, that was clearly not going to work in a remote work environment. So we were able to very quickly pivot, and we had fortunately already started implementing an online expense and invoice tool. So we were able to roll that out within a couple of weeks. We also reconfigured our strategic plan, and it highlighted pretty quickly that our technology solutions were not adequate for a ever evolving and dynamic kind of new work environment that we had. The reporting wasn't good enough, so we were able to convert from also an online platform, but to a much more robust Sage Intacct.
Right. So Brant, how did the pandemic affect the way that you guys worked and pivoted, and how's that carried on to your new role?
It's super interesting. Obviously, like most companies, pandemic hit, everyone went remote. But for us, we doubled year over year volume. We grew 100% in a year, right? We're very fortunate that our systems and everything was kind of up to speed and up to scale with Intacct and other, processes where, we could handle increasing in 3 months, 100% year over year without the volume, right? And not really, be kind of, limited, so to say, on that. But, we were lucky that we had a great, like journal entry system set up with support, everything stored in Intacct. We review and approve. Our AP was all automated already with like a Bill.com Stamply solution. So we're just fortunate that we kind of got ahead of it, because if we were manual, I don't know what we would have done, right? There wouldn't have been enough time to kind of, adapt if everything's remote and trying to work that way, right?
Right. Yeah. So you were ahead of the curve and, just really thrived, not just survived during the pandemic. Ashley, it sounds like, you guys were able to quickly pivot and, get automated. So those are great success stories. Brian, when you were talking about the overview of the org, it sounded like you had some very specific requirements for a new solution for finance because of the global needs and, these acquisitions. So, how did that help you or guide or, I guess, require you to move to a new solution and get off QuickBooks?
Well, we definitely needed to move. We realized that, this is our second turn at being PE owned. The first firm was good, but the second firm is more data oriented. So we needed to be able to increase our ability to slice and dice the data versus what we could do in QuickBooks. We can do that in Dynamics very easily by inserting, various what's called dimensions, so that we can, filter on that information, get the information that we need down to the client, the project level, across different clients, things like that, for different departments, for different tasks within projects, things like that. It's all easy within our new solution. Like you said, we had the global requirements for currency conversion. We needed to do consolidations at at the snap of a finger. We can do that all within Dynamics, and Solver is the reporting software that we put on top of it.
Solver is very powerful. I do know many of our clients use that as well. So
absolutely, and the API between the two makes it really easy.
Yep. Ashley, same question for you. In addition to just going to the cloud and solving for expense reporting, what other requirements did you have for a new solution for finance?
Yeah, so a lot of my problems with my previous system revolved around reporting. Just everything was export to trial balance and manipulated in Excel. So it needed to be fully customizable reporting for, every audience that we have, from our auditors, our finance committee, and my budget managers, which all have very different presentation needs. So very robust reporting. And it needed to scale for new programming initiatives, and to be able to keep track of new ways of doing things. And it also needed to track multi-entity. We have a pension company that is kind of a separate parallel that we needed to be able to also bring. We had been tracking all of that with a spreadsheet. So bringing some technology to our pension as well. The other thing that was really important was giving access to my budget managers, so that they didn't have to come to me when they wanted to know, hey, how much have I spent on this marketing budget? And
More of a self-serve type of a thing.
right. And something that had really strong customizable controls was also really important.
Yes, controls would be important. Now, I can imagine at the Phil, potentially many of your budget managers are, I'll call, creative types.
Yeah.
That's the opposite brain of most of us here, would be more
Yeah.
on the number side.
Yeah, that has been a big part of my job and my career, has been kind of translating these theoretical accounting concepts and requirements to my production manager. Like, what's a prepaid? Explaining that in ways that they can understand, and having this live access has given them a lot more insight into how their coding of their expense reports flows into their income statements.
Right. Yeah, that's really interesting. Brant, I know you and your finance team selected Sage Intacct, other expense and budgeting tools, AP automation, over other solutions such as like NetSuite and GP at the time. What were some of your key reasons that you made the move to Sage Intacct over some of these other solutions?
I think the main thing is, we're going back a little bit of time, but the ability of Intacct to be customized, kind of fit our back end tech stack. If you think of, consumer goes on Grubhub, they place an order for pizza, that all goes to database, and we got to record our revenue, and then we have to take that money, take our cut, and pay back the restaurant a week or a month later. The ability to take that information and pay it out of our general ledger system versus manually, how we did it before, was important. We felt that the ability to create an API to pull that data in was much better with Intacct, and just the Intacct management, having access to Aaron and the entire team is great during the selection process. And we honestly didn't get a great feeling from NetSuite at all, right? They barely want to talk to us, kind of acted like we were too small for them at the time. And it was a pretty easy decision with all the things that we need from Intacct, from controls, from entity reporting, customization, API calls, tech modifications. That is the best solution for us.
Great. And how easy was it? I know you've had a lot of benefits with Intacct over the years. In fact, through the IPO and through the acquisition by the European company and all that stuff. But how did you justify that original investment to your senior leadership team?
I mean, I know during the interview process, one of the things that was important on everyone's mind, even the founders' mind, Matt Maloney and Mike Evans, was like, look, our system is, dying on us, right? And, it's taking 6 hours to do stuff in QuickBooks, it's time it out, and it just is going to break. You kind of hear this story about systems breaking with venture-backed companies that are growing really fast. It's kind of a story that's happened to a lot of companies, and it was on their mind, and got communicated to me, hey, we got to get off this. So I think the fees spent were very reasonable, and we need to do it, and it just wouldn't, we wouldn't be able to live as a company. And you're stuck in a situation of, hey guys, we can't go public now because our system isn't good, or we have material weaknesses, telling the investors that none of our information is reliable. And it's a cost benefit, but really wasn't an issue to really justify spending that money.
Right. And Brian, you've already kind of explained that the justification to the second private equity firm was pretty easy as well, because
Yeah.
again, QuickBooks manual and all that stuff. You know, Ashley, I think you had the same, experience, in sort of moving to Sage Intact. Ashley, did you have to justify this investment, or how did your leadership team take this?
Yeah, I had previously implemented another instance of Sage Intact at a previous job at the AT&T Performing Arts Center a few years before. So I was very familiar with the efficiencies that I was going to be able to build in. So it was very easy to make the business case for a tool that's going to reduce manual touch points and be easier to use, have more reliable reporting. It was kind of a no-brainer. In the part of our turnaround plan was figuring out how to streamline my own department. So having better tools is going to be, was key to, succeeding there.
Well, yeah, not walking around the office and handing paper journal entries.
Yeah.
Yeah, that's great. Yeah, I can see that for sure. I think you've all seen measurable results, moving to your respective solutions, Sage Intact and the Business Central solution for Microsoft. Brian, what about the results that you've seen moving off of QuickBooks to Business Central?
We've definitely been able to see the improvements and the efficiencies by switching systems. We've been able to automate the workflows within Dynamics, so it's not, paper or even email based anymore in certain cases. We've tied our GL to bank feeds so that, all that work is done throughout the month instead of it in the month end process. So it's completely out of the month end close right now. In Solver, we're actually looking forward to budgeting for the first time in that platform for 2023 fiscal year.
Okay.
And, getting out of Excel where we've been for years and years, just like everybody else, not having to do the roll-ups of our budgets for the various companies in Excel will save us countless hours in itself.
Oh, yeah. I mean, that's a game changer.
Yeah, it absolutely is.
So with my background, I'm a CPA, and I, have been implementing systems for most of my career after a short stint in public. I also owned my own business for over 10 years before I merged with Armanino exactly 10 years ago this month. So excited. And I've seen technology in the back. Well, typically the people in the back office, that's us, right? That's us accountants in the room here. Typically, we have sort of been like the cobbler who has holes in his shoes because we help everybody else, right? So how now with back office technology becoming so prolific and especially in the cloud, cost justified, that I'm just curious to hear from any of you guys, how you think technology in the back office is really going to even improve and adapt for the future. What do you guys see going on in back office technology?
I'll just say a little bit here. With good amount of companies have already decided never to go back to their office. Some have implemented hybrid plans. That's where we are at this point. We think we're going to maintain a 50-50 split on average for all of the typical people that would normally come into the office 5 days a week. Being able to move all of our technology into the cloud, implement the self-service options on in certain platforms such as Solver, so that they can pull their own actuals, pull their own budget to actuals, things like that. If they want to do it in the mornings, the evenings, whenever they want to do it, they can do it. And it's going to alleviate the drain on our resources within the accounting team.
What I love about when we take clients to the cloud and rip them off of their legacy systems, whatever that might be, it's usually QuickBooks or it's legacy on premise. But what I really see is not so much a cut in headcount, but it's taking your employees and empowering them to use their brains more and add more value to the business. So therefore, what I see is that not only Are your people getting information faster with self-serve tools? But your own team is adding more value and probably what I see is increased job satisfaction because they are adding more value and they're not doing the mundane task of keying stuff in over and over and over again. So,
Well,
you're
Lindy,
just kind of,
I think
yeah, what do
the
you think,
biggest
Brand?
thing, I remember, we're going back, 10 years or so on Intact, but it was a morale boost for our team, right? Every time you write a check, we were writing 2,000 checks a week and ACHs and all that, that's 8,000 a month. People had to clear up by hand, right? Because QuickBooks couldn't really link to your bank. When it's automated, you free up 15 hours that someone would spend doing that, right? And it's very mundane, looking down a bank statement, highlighting, going QuickBooks, checking off by hand, right? And it just gives people better satisfaction in their job and better spirits, knowing they don't have to do these manual tasks, or, they don't have to bridge the gap between thousands of transactions and bring them over manually and check them out and all that. It helps me because I have the comfort that everything's right versus trying to look at a bunch of data and make sure it came over right manually. And, just brings everyone's spirits and, the attitudes improve at the company.
Totally. Yeah, I see that too. And it sounds like most of you are still staying in hybrid situations, much like Armanino as well. We kind of see that as well. But Ashley, I know your team is returning to the office in October for a group session. Maybe you could tell us about what you've got coming up in the future with your on-site and with some of the other initiatives you're looking for the next 6 months.
Yeah, the next 6 months are going to be pretty huge for us. We during the pandemic, I don't remember if I mentioned this or not, but we accelerated a complete gut job renovation of our performance hall, David Geffen Hall. So, we were like, well, everybody's out of the office. Let's just gut it. And so we go back to our brand new home starting in October. So the next 6 months is going to be a lot of meeting people that we've worked with for a year that we've never met in person, and figuring out where everybody's office is, and really figuring out how this new hall functions. We've brought a lot of new technology into this space, so it's a lot of figuring out how all of that works, and also what it's going to cost. We're a resident company in David Geffen Hall. We don't own the building. Lincoln Center actually manages it for us, so we basically pay rent. So it's a bit exciting learning what is it going to cost us to be in the hall. So, and on top of moving into our new home, we'll be in the middle of our audit. We're also implementing a new payroll system, which will integrate with our accounting system. So I'm very excited about that, but it's a lot to take on all at once.
That's a lot, but it sounds pretty exciting. So I think we've spent a fair amount of time talking about the pains of current systems and reasons and to move to a new system and the benefits of moving to new cloud-based and the cost justification. But what I see, because we're your partner, all three of you guys, we've partnered with you to help implement these solutions. Why don't you just describe, Brian, I'll start with you first. What kind of value Armanino brings as a strategic business partner to this process? You're just going live now, so you're fresh. What did that look like for you?
Well, our PE firm had a really good relationship with Armanino. They recommended that we talk to you, as a team, and, so glad they did. The team that you guys put in front of us, walked us through the discovery phase, which is, to me, the most important of them. And they helped us identify things that we hadn't thought about in years or ever, for that matter of fact, just because our systems couldn't handle some of the things that they were bringing up, or our prior systems couldn't. So now they're talking about, ways that we can actually do things that we never had the capability of doing. So they helped us design some of those workflows, suggest new ways of doing things that we had been doing in order to take advantage of the new technology. I mean, they not only they put in place a newer, more efficient, quicker system, but they also helped us, improve the processes within the accounting team.
That's great. Yeah, I think, it's so important when you're implementing a new system that you don't put the QuickBooks into the BC, or you don't put the QuickBooks into the Intact system. You think
Yeah.
about it, you redesign it. Ashley, you've recently also moved to Intact and others. How did that work for you as far as not just slamming in QuickBooks and Intact? And then what was your experience with Armanino?
Yeah, that was one of the things that I was most excited about, was getting to clean everything up, because the system we had been on, they had been using, I think our records went back to like 97. So we had a lot of data, and there was just a lot of inconsistencies in the way we had recorded things, and just our chart of accounts was a mess. So getting to totally redesign it for, fully customized to how we work, how we need to report, and how we need to manage things was vital and very exciting, and is working so well. I couldn't be more pleased. We had a previous relationship with Armanino for many years. I've worked with them at a couple different places. So I was very confident in their kind of the expertise that they could bring to the nonprofit space, and, understanding that they knew, when I was trying to describe a process, it was important to me that I had confidence that they knew not just the words that I was saying, but like the spirit of my request, and really understanding how to make the technology work for what I was trying to accomplish.
That's pretty cool. Awesome. Brant, I know you and I personally worked together well over a decade, and you've used Armanino for many other services beyond the Intact, but how important was that early partnership with Armanino, and how does that translate into today and the future?
Well, it's interesting, right? We certainly put the initial system in, but Lindy, what we're not talking about is, we went public and bought 15 companies, right? And each one of these companies that we bought was on QuickBooks or some old systems. So we did 15 more system integrations, right?
Mm-hmm.
And, when you're a public company, you don't have a lot of time to really waste on not putting the system in place. So, we would agree to buy a company and be live 2 or 3 months later. We had to start planning for that system integration right away, even before we really owned the company, right? We would have 2 or 3 months to put in place because, we're subject to SOX, it's going to be tested. And, Wall Street doesn't care, right? Wall Street doesn't care that, hey, you just bought this company and they're on QuickBooks and, there's no journal entry approvals. You got to fix it right away. And you have to get on top of it. You have to plan. And, it was seamless doing this, 10 plus times that we did it together. Right. And, we leveraged our relationship from, system work to doing our SOX work, internal audit work, equity, and some, R&D tax credit work, and kind of the whole gamut of our work. Right.
Right. Well, I think that goes to the value that, I personally believe that we bring to the table for our clients. It's easy just to be a point solution. Oh, I need to put in Intact, I need to put in Business Central, but to extend and expand that relationship to many other areas. We know and understand the businesses, we know and understand the people and your mission and goals. And, I just personally love when we extend that relationship and expand it to other areas of the business. We do strive to be the strategic business partner to our finance and accounting folks and teams. So I think that's fantastic. And you guys have really highlighted that. With that, I think I'm going to about end it. We've talked about everything. Again, the problems you're having on current systems, how you went through the selection process, how you selected your respective platforms and solutions, and the benefits you've been reaping from implementing them with Armanino, I think is great. I do really appreciate your time today, Brian, Brant, and Ashley. It's been a pleasure chatting with you here today, and I'm really appreciative that you're sharing our story with more clients who want to make the move, and maybe you've inspired them to do so sooner rather than later. So really appreciate your time today. Thank you so much. And to our audience for sitting in. I think as Ally said, you'll be getting copies of the slide deck and the link to this recording soon. And I hope everybody has a great day and enjoy your afternoon. Thank you.
All right, thanks, Lindy.
Uh-huh.
Thank
Take
you.
care. Bye.